Hi, I'm Jeff Banks from MW Lomax, and this is the Banks Report.
The Banks Report, a commentary by noted property and business tax consultant Jeff Banks. Jeff is not your ordinary accountant and speaks in words and terms that you understand.
In my practice, I help people who are working hard and using property and self-employment to help them reach their financial goals. This week I want to discuss two words that in taxation can define the way we are taxed, and as such, the way we might seek to structure ourselves with a view to minimising the taxes we might incur. This particularly affects property people, but can also in some cases affect the micro business person. We are talking about the terms investment and enterprise. Let's take it for instance. If I'm a corner store owner, you would agree I am showing enterprise, that the goods I buy and sell are taxed based on the profit I make, and the expenses I claim are due to the fact that I am in business. When I sell that business, you would expect that as an investment, capital gains tax would apply to the transaction around the sale, wouldn't you? Pretty black and white, really. But what about property? Are all property transactions investment in nature? Clearly, if I am buying and selling them in the same way my corner store owner does with the groceries, am I not showing enterprise in the way I treat property? But if I buy, renovate and sell property and it takes 12 months to do so, does this constitute an investment transaction simply because the capital gains tax 12-month provision may seem to apply? So we see the conundrum? The next question then is, what if I clearly have investment properties and I start showing enterprise? The taxman has taken a low-hanging fruit approach of late, backed by some decisions in the High Court, that if a taxpayer shows enterprise with any property owned, that he can deduce all properties owned are tarred with the same brush. To me, it seems clear that we don't want to confuse investment and enterprise transactions. We don't want to give the taxman any chance to suggest transactions we want to see as investment are normal revenue transactions and taxed at marginal rates. In taxation, capital gains tax is your friend, and having transactions taxed under its regime means less actual tax to pay. Transaction structuring is an important part of any strategic plan. Assistance with this type of planning is never far away. You can contact one of my team by contacting us at strategy@mwlomax.com.au, and we can work through an effective structure to ensure you pay the least amount of tax possible.
The Banks Report is created by Jeff Banks of MW Lomax, a specialist financial services firm offering strategic advice and services you need in property and business, including accounting, taxation, finance, financial planning, risk insurance, superannuation, and business advisory.